Today's sponsor is the Federal Reserve, printing tomorrow's toilet paper today. Welcome to The Grasp. I'm Doug. There's been a lot of talk recently about inflation, but what is it really? Inflation is a term that most everyone's heard of, but people think of it as something esoteric. When most people think of inflation, they simply think of rising prices. But today, we're going to break it down in a simple and easy to understand way. We're going to show why it's so important and what in the world it has to do with cryptocurrency. So grab a beverage, pick up a pencil, and let's get it. So before we dive into inflation, there are a few things that we need to cover first, namely, what is money, what is the problem, and what is the solution? So when we're talking about the economy, we're talking about the total of goods and services and property. So the issue is, if you want to buy 30 horses from me, how do I send you 30 horses and receive 30 horses worth of value back from you? Now, how do we keep the books balanced? We do that through money. So what is money? Money is economic energy.
Alrighty then.
If I send you 10 bushels of corn, you send me back 10 bushels of corn worth of money, we can trade.
Ready, Ted? Ready, Bill? Let's go back into history.
Throughout human history, we have used many things for an exchange medium, or money. Seashells, glass beads, stone coins. The issue surrounding any medium of exchange is its scarcity and uniqueness. If a tribe on an island is trading stone coins because they are rare and not common, that works. The issue is, what if a European sails in a boat and they know that the island next door has an abundance of rocks? So they can literally sail over there, load up their ship with rocks, go to the other island, and completely dilute their economic buying power by flooding the market with stone coins. They'll impoverish the entire island. We have used many other mediums as currency as well. In colonial America, bales of tobacco. Throughout history, Rome and France and England, we've used copper coins or silver coins or eventually gold coins. The problem with any of the precious metals is one of portability and storage. So it's no big deal if I want to buy something from you and it's going to cost a coin or a couple of coins, because you can easily slip those in your pocket, carry them around. But what about a huge transaction? What if it required 10 tons of gold or silver? All of a sudden, that's an issue. How do you transport it backward and forward? How do you store that? So ultimately, merchants, governments, municipalities, empires, kings settled on ledgers. A shared ledger which says who owes what to whom. Evidence of ledgers dates all the way back to ancient Samaria. 5,000 years ago, we have found clay tablets that show bushels of corn or oats or whatever being traded. So we know that ledgers have been around for thousands of years. The larger issue has always been, how do we keep track and fairly distribute who owns what? How about a simple example?
Absolutely, will do.
Let's say that the economy has $100 million worth of stuff. So if we print $100 million in bills or cash or tender, then we have balance. I have $100 million worth of things, goods and services, and I have $100 million in currency or money.
Well done.
The problem that has plagued every government and sovereign throughout human history is the temptation to inflate the currency. For example, if I print another $10 million worth of currency, the amount of goods and services and property in the economy is static. It hasn't changed. But on the currency side or the money side, I have increased the amount of money by 10%. So I have 10% inflation. Now, because the goods and services haven't expanded any, all of a sudden, everything is going to become 10% more expensive. Specifically, anything desirable or rare.
Were you hurt?
Only my feelings.
If I keep inflating the currency, then I continue to raise the cost of those goods and services inside the economy.
Skunk! Whether my word is better or not, my brain is. I don't judge a situation before I understand it.
If I continue to increase the currency, then let's say double it, then everything will double in price. And logically, you can follow this on out. If I print out 10 times the amount of currency as the amount of goods and services and capital inside the economy, everything will be 10 times more expensive. So in a way, we can think of money simply as economic energy. The problem is inflation, and we'll cover that in our next video. We'll see you back here on The Grasp.